Good morning, folks. Just we are doing good. Well, welcome to another webinar series that we've got today. And yes, the beer markets. And a lot of us have had an experience of the beer markets. Well, possibly. But yes, it's quite interesting to want to talk about the beer markets today. And as you all know, I'm your host, Akinwale Chibuke. I'm the financial analyst and educator at Global Markets, and I'll be walking you through this. Well, I won't say amazing, I would say mind blowing session today. So, what we'll basically be doing is good morning, Address, good morning, Kanke. So what we'll basically be doing today is we'll be talking about a lot of things, okay, from our last class to this class. And this is not a big lecture, okay? This is not a big lecture. This is like or this is going to be a conversation, a discussion between me and everybody, like getting everybody's thoughts, perspective, because that's what the bear market is. We've always been bullish, or we've experienced the bulls in the market, and we see how amazing it is in the bull market. Which we just hit the buy button multiple times, and we make money. But the bear market is different. The bear face is different in price, and that's what I want us to talk about today. But before we hop into today's session, okay, before we hop into today's session, I've done an introduction of myself already. The rule still stays the same. For conversations, you use the chat box. For questions, you use the question section. Um, I send out polls from time to time. Use the poll section, and people, it's to check if your friend or someone you are familiar with on the webinar is on the webinar. Okay. So at Global Markets, we offer you access to trade the financial markets. Okay. We offer you access to trade the financial market. We give you access to financial freedom because the financial market is financial freedom. Okay. And how do you access the markets through Global Markets? Very simple. Okay. Very simple. We have products that give you access to the financial markets, products that are for you, which the first one is the MT4. The MT4 is a platform where you trade the financial markets in dollars, okay, in foreign currency, which is dollar. You trade the global financial markets in dollars, and we've got the cloud trade platform where you trade the financial markets in naira. Okay, you trade the financial markets in naira. That's the cloud trade platform. Okay, now the last product that we have that gives our clients access to being financially free and trading the financial markets is the copy trade platform. Okay, the copy trade platform where we give you access to thousands of consistently profitable traders where you can copy their trade in an automated process. Okay, it's even an automated process, very automated. Okay, if you can't learn about the financial markets, you feel, or from what you've heard, they say it takes a long time to learn about the financial markets, or you work 9 to 5 and you can't really um you don't really have time to trade the financial markets. Using the copy trading platform allows you mirror what other traders are doing and replicate the same results for yourself. So good morning, Abbas. Good morning, Emmanuel. Good morning, Usman. Good morning, Linda. Good morning, Olawumi, and good morning, Latifa. I hope we all are doing good. Yeah. So it's quite cold in Lagos today, and there was a bit of a rain this morning, I guess, and it's very cold. So yeah, how is it going for you guys? How has it been? Let's run through the quick Q&A. Have you got any question at all about the financial markets, possibly relating to this topic or other topics we've discussed? Okay. Any question at all about the financial markets? I can see that we've got a full house today. We've got David, we've got Kelechi, we've got Kadri, we've got Stephen, we've got John. Yeah, John, hope you're doing good. We've got David also. Yeah, it's quite a bit of a full house, and yes, that's amazing. Okay, we've got Emmanuel. Emmanuel, welcome. Thank you for joining us. How has your trades been? Okay, so has anybody got any question at all about the financial markets? Anything you want to say about the financial markets? You want to share ideas or a question you want me to answer that has been bothering you, or more clarity about the financial markets to be precise. Okay, let's start with that before we hop into the topic for today. Okay, so any question at all? Okay, great. We've got one question. Okay, so someone says, "This is my first time here. You don't know anything about the financial markets." Okay, um, Kanke, let's focus on this aspect of trading. Okay, the financial markets is a big space where you trade, or yes, you trade or you navigate by trading between financial instruments. Okay, and we've got forex, which is the foreign exchange where you trade currency pairs. We've got stocks where you can buy and sell shares. We've got cryptocurrencies where you can trade Bitcoin and the likes. We've got indices where you can trade the Dow Jones, Wall Street, and also if we talk about forex in this instance, forex is a $6.6 trillion market. Okay, $6.6 trillion market where your your potential to earn is endless. Okay, nobody tells you this is how much you should earn from the forex market. $6.6 trillion just by trading, buying and selling of currency pairs. Okay, buying and selling of currency pairs. I've got two basic PDF about the financial markets. If you're not on the Telegram group, I will drop the link to the Telegram group in today's webinar, and you would get those PDF. Check through the pinned messages. You'll find those PDFs there, and that's just it. Like that's basically the financial markets in one word. It's a globally decentralized market that trades for 24 hours a day, 5 days a week. That's just what the global financial market is. Morning, morning, no problem at all. Okay, I just will talk about inefficiency in price and efficiency in price later on at the end of the class when I'm breaking down NZD USD. Okay, because of the new guys, I don't want to rush into that. Okay, I missed you too, Silas. It's been quite a while. I saw you on my classes. Hope you're good. Yeah, you've got nothing to worry about at all. You've got nothing to worry about. I would walk through. I'll explain the about the financial market, about the bear markets in, like I said, we are all 5 years old. Okay. Now, what is the advantage of disadvantage of the financial market? So, the major advantage of the financial market is it creates financial freedom. Like this market has a lot of liquidity. When I say liquidity, I mean flow of money. Okay, just the forex market alone has $6.6 trillion. The stocks market alone has around $210 billion flowing in it. The crypto market has $1.5 trillion flowing in it. And you, as a regular person, as a trader, as a doctor, as a lawyer, as a teacher, can trade this market with as low as 10,000 naira. Okay, as low as 10,000 naira, and you can earn profits from it. Now, nobody's telling you because you came to the market with 10,000 naira, you can't earn as much as you want. You can earn as much as you want. Okay, nobody's holding you back on how much you should earn. That's just what the financial market is. Okay, now in the financial markets, we have, okay, I'm still on the question Emmanuel asked. Now, that's the major advantage of the financial markets. You get leverage also, like free money to trade added to your capital to trade. Okay. Now, the disadvantage of the financial market is the risk it carries. Okay. I know most people will say, I don't want to talk about disadvantages, but that's the major thing. Once you understand the advantage and disadvantage of something, you'll be able to weigh the benefits. Okay. You'll be able to weigh the benefits. So, the disadvantage of the financial market is the risk it carries. Okay. The risk it carries. On our platform, if you go to our website, you'll find a disclaimer down below on our website that explains in detail the risk it carries. Okay, you'll find it there on our website. But straight to the point and simple, um, there's this saying, you can't get rich without taking risk. Okay, you can't get rich without taking risk, and that's the logic. Nothing in this life is 100% sure. I always say that nothing. That car you're buying tomorrow, you don't know if it will develop a fault in a week's time. That new shoe you just bought, that new Dior bag you just bought, you don't know if the strap might get caught. next week. Okay, and that's just the logic behind everything we do in life. Carries risk. Leaving your house is risky. Staying indoors is risky. Okay, and that's just the logic. But when it comes to the financial market, I can gladly tell you and boldly tell you that the advantages far more outweighs the disadvantages. Okay, the advantages far more outweighs the disadvantages. Now, before we hop into today's session, can anyone tell me what we discussed in the last webinar? The last webinar that we had on Tuesday, can anyone tell me what we discussed in the last webinar? Anyone at all? What we discussed in the last webinar? Anyone at all? What we discussed in the last webinar?
I feel you might go to the wrong case and it's not, the code is not, you need a package to submit or something. It's bringing the wrong message.
Try again. Okay, so yeah, support and resistance. That was what we discussed in our last webinar, support and resistance. Support and resistance. Now, from everything we discussed majorly around support and resistance, what were we able to learn? Okay, what were we able to learn from support and resistance? Were we able to go to our charts and see how support and resistance plays out? Were we able to see how price reacts at support and resistance? Okay, were we able to see these things I explained on the webinar? Were we able to see it in real time? Yes or no? Okay, yes or no? I just want to get a yes or a no as an answer to know if we went through it over again and applied it on the charts. So yeah, Emmanuel, it's not a ridiculous question. Okay, no question is ridiculous, no question is stupid. All question has a reason. Okay, if you place a trade, you can let your trade run for as long as you want. You can let your trade run for as long as you want. Okay, you can let your trade run from as long as you want. Okay, that's brilliant. One from I just said yes, he was able to see these things and make from it. Brilliant. Okay, any other person? Brilliant. Okay, great. Okay, going through the questions again. What's the disadvantage of leaving your trade running, even in loss, while you're patient? The only reason you are leaving your trade to run, even if it's in loss, is because of it has not hit your stop loss. Okay, so there's no disadvantage there. You're just being patient for price to either go to your take profit or go to your stop loss. Okay, no disadvantage there. Okay, you can get started trading with as low as 10,000 naira. Okay, 10,000, because that's the minimum doesn't mean you need to get started with the minimum. Okay, because 10,000 naira is the minimum, you don't need to get started with 10,000 naira. You can get started with more than 10,000 naira so as to increase your chances of being profitable whenever you trade. Okay, so to today's topic, how to navigate the bear markets. Okay, how to navigate the bear markets. Okay, now what we'll be talking about generally is, in this session you learn what is a bear market, understanding what the bear market is, phases of price in the bear market, what to do in the bear market, taking advantage of discounted prices of assets in a bear market. Then conclusion. Okay. So I want us to take 2 minutes to write this down. Okay. What is a bear market? Understanding what the bear market is, phases of price in the bear market, what to do in a bear market, taking advantage of discounted prices of assets in the bear market, conclusion. So I believe we all got that on paper. Now, can anyone tell me what the bear market is? Your perspective, okay? There is no need to go to Google if you don't know it. Just say you don't know it. Just your perspective. What you from just from this image here? What do you think a bear market is? Okay. What do you think a bear market is? I'd like to get a lot of response today. Okay, because some of us that trade crypto knows that we are in a bear market. Some of us that trade just dollar, DXY, knows we are in a bear market when it comes to dollar. So I'd like to get a lot of perspective on this. What is a bear market? Okay, I'm waiting for a lot of response. Okay, so someone said going short. Wow, I'll take that. I'll take that. Um, okay, a lot of response. A bear market means a financial instrument is crashing or falling. Okay. Okay. Kanke said, from the picture, I think it's the decline in the financial markets. Brilliant. Decline. Okay. David says, markets where sellers are in control. Emmanuel says, it means losses. Okay. It said that whenever the markets market structure down to trading direction. Wow. Yeah, I will take that from Ajus, but not really what I was expecting. Peter says lower lows and lower highs. Okay, a lot of perspective. Is that all? Or I'm still expecting, okay, a few people are still typing. I'd like to get more response on what you think a bear market is. I'd like to get more response on what we think a bear market is. Okay, let's see. When hunters hunt down your shares and eat you up. It's just a joke. It's just a joke, Shala. It's just a joke. It's a SMC joke. Okay, I just said the movement of liquidity from resistance to support level. I love that. I love that. I'm actually waiting for a lot of response, but I think I won't be getting a lot. But yes, to everyone who gave their thoughts and ideas on what a bear market is, thank you very much. I like the courage. I like the courage, and I like the fact that we are all outspoken and we did make mention of the major word falling or selling. Like that is key. when it comes to the bear market. Okay, market advantageous to sell at that price. Quite interesting. Okay, so let's go back to this. What is a bear market? Now, before I give you a definition of what a bear market is, I'll use a life example. Okay, I'll use a life example. You're at the supermarket and you just got this new escalator to the upside. Now, you want to go downstairs to get a can of fruit. Will you use the escalator that is going up or the escalator that is going down? Which one will you use? Remember, you're upstairs and you want to get a can of fruit downstairs. What would you use? The escalator that is going up or the escalator that is going down? I'd like to get response. Okay, the one that is going down, going down. Okay. Anyone else with another? Someone might want to jump down. Well, that's just a joke, though. The one that's going down. Everybody says the one that is going down. Okay. Now that everyone says the one that is going down, why did we choose the one that is going down? Why don't I use the one that is going up? Maybe I can walk down on the one that is going up. Why don't we choose the one that is going up? You can actually walk down the one that is going up, but why did you choose the one that is going down? That's quite tough, but let's see. Brilliant. I love that. Cause of direction. Because of the direction. I love that. I so much love that because of the direction. That's it. That's a bear market. The direction is down. You are going down. You don't take something that is coming up because of you want to go down. Which is one going up because of it's actually the one going in our direction. Brilliant. I so much love that. Now, that is a bear market. Down. Down is a bear market. Now, what a bear market really is in the financial markets, some will say forex industry, but I think it as financial markets. You see, whenever you get an announcement on CNBC or Bloomberg, any of these TV stations meant to broadcast news about the financial market, and you get them say, or you hear them say, we are now in the bear market, it basically means the market has declined. Okay, the market has stopped moving higher and has declined by 20% or more from a recent high. Okay, from a recent high. Now, the idea behind a bear market is once we are bullish, we are bullish. Okay, now once we are bullish, we are going up. That's the meaning. And when you are going up, the market should not decline more than 20% when you are going up. Once it declines more than 20%, there is this idea or thesis that gives you the ideology behind the fact that if it declines more than 20%, market structure has been broken. Sentiments have started moving to negative perception about the markets. Okay, that's just the meaning. When we say it has declined more than 20%, it's bearish. It means market structure has broken downward. The market, its structure was up before. Now the structure is down. That's just the meaning. It means sentiments are start changing from being positive to negative. Do we understand? Do we understand? Yes or no? Do we understand what I just explained? Yes or no? Now, if you don't understand, I beg of you, don't say yes. Okay, don't say yes. It's not good. It's not good for you. Okay, say no. I'm here for you. I'm here to walk you through to make you understand it. So don't say yes. Say no if you don't understand. So I just sent out a a two polls. Please let's respond to the two polls. Okay, let's send out two polls. Let's respond to two polls. Okay, brilliant. I like the fact that you guys were on point with it. Okay, yes and no. Good. Now let's use another example. I'm trying to figure out the right life example to use, but let's take it through that same route again. I said a bear market is when a market experiences prolonged price decline. That means price just keeps going down, going down, going down, going down, going down. Okay, that's what a bear market means. It means generally the characteristics or the idea behind that financial instrument or financial asset has fallen or declined more than 20% from recent areas it was before. Do we understand? It means what it just means is it was going up before. It was going up, going up, going up. Then all of a sudden, it just started going down, going down, going down, going down. That's what it means. It was going up, up, up before. You were buying, 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 making money before. Now it just started going down, 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 down. You'll be wondering, what's wrong? Why are you not making money anymore? That's just what it means. Do you get the logic now behind the bear market? And yes, we actually a lot on the call on today's session. So let's respond to the polls. Okay, I tell you guys always, you can't pay me for my time. How do you pay me for my time? Is by responding to the polls, so I can know how to structure my classes better, how to pick the right topics to enlighten everyone, to share the right nuggets. Okay, great. Now that we understand what a bear market, or now that we just understand the definition of what a bear market is, now let's get to understanding a bear market. I will use a popular case scenario. Okay, I'll use a popular case scenario. Okay, we've got a question. I actually want to respond to all question at the end of the class. Yes, it must decline more than 20%. I can still consider it bullish, but once it is more than 20%, it's bearish. Okay, it's bearish. Once it's more than 20%, it's bearish. Once it's more than 20%, it's bearish. Now I want to use a popular case scenario. If you don't know what Bitcoin is, can you say I don't know what Bitcoin is in the chat box? If you know what Bitcoin is, just say yes. If you don't, just say no. Do you know what Bitcoin is? Bitcoin. 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 Do you know what Bitcoin is? Okay, I see a whole lot of people. Wow. Someone said they don't know what Bitcoin is. Wow. Okay. Bitcoin is an asset under the asset class of financial instrument, cryptocurrency. Okay. Cryptocurrency. Have you heard of cryptocurrency before? If you don't know what Bitcoin is, I believe you can't. Okay. If you don't know what Bitcoin is, you can't know what cryptocurrency is. Okay. But if you know what cryptocurrency and you don't know what Bitcoin is, wow, that is a lot of trouble right there. Okay. So let me quickly break down Bitcoin. Bitcoin is a digital currency. Okay. It's not like fiat that we all know. You can't see the money, but it's a money, or it's a means of finance, a means of money where you can't see. It's only online. Okay, that's what Bitcoin is. That's what cryptocurrencies are. An example of cryptocurrency is Bitcoin. Okay, that's just it. You can, after the class, you can do your research on Bitcoin. So understanding what a bear market is, I want to use Bitcoin as an example. Now, I'll be sharing my screen in a few minutes. sharing my screen in a few minutes to show us an example of what Bitcoin is. Okay, sharing my screen in a few minutes right now to show us what Bitcoin is. In a few minutes, you would see my screen right now. Okay. Trying to share my screen right now. Okay. If you can see my screen, just say hi in the chat box. If you can see my screen, just drop a hi message in the chat box. Let me know if you can see my screen. Drop a hi in the chat box. If you can see my screen, just drop a hi in the chat box. Great. Now, let's explain, or let's get to understand a bear market better. So I'll be talking about Bitcoin from okay, let me reduce my screen size. I'm talking about Bitcoin from 2020, okay, from 2020 till date, okay, or let's just say 2021 till date, okay, 2021, right here. So this is the beginning of 2021 Bitcoin charts, just to give us all an understanding of Bitcoin. So this right here was the beginning of 2021, and let's see how high Bitcoin traded. Let's just start from this low. Let's take it to this high. So Bitcoin went high as 133.99%. Okay, it went as high as 133.99%. Now we'll consider Bitcoin bullish here, right? This is a bull market. Yes or no? If a bear market, it means price is falling. A bull market means price is going up, right? So do we consider this 133% move to the upside a bull market? Yes or no? Yes or no? Yes or no? Do we consider that 133.99% move to the upside as a bull market? Okay, great. Now, let's look at what happened right here. Okay, so let me just reduce this. It's still at that high, so we still got 133 point something percent. Okay, now let's look at what happened when it got to this high. It moved down. Okay, let's just look at 20% right here. Okay, 20% right here. Now, I want to adjust this a bit. It's still the same thing. I just moved it to the side a bit. Now, look at this 20% drop. Would you believe that this has transitioned into a bear market? Yes or no? As a trader, just looking at the charts, would you believe that has transitioned to a bear market? Yes or no? Let's be true to ourselves, okay? Will you believe that has transitioned to a bear market? This is a bull market, this one right here. Maybe I should change the color to gray or something so we can distinguish between it. Everybody's saying yes. You're supposed to say yes with a reason. Okay, I'll make it interesting. Let's say yes with a reason. Give your reason. Will you believe it had transitioned to a bear market? And give your reason. I like to see everybody's reason for saying yes. Okay, so this is a bull market. While this small thing is a bear market, do you believe it has transitioned to a bear market? Just give a reason based on what we explained. Okay, because it had gone down to 20%, because it had went down. Okay, but let's be candid. Let's be candid with one another. Didn't it go down here? Did you consider this as a bear market? Didn't it go down there? But why didn't you say this was a bear market? This went down 27%. 27, and this was just 20%. Okay, this was just 27% here. This was just 20% right here. Why didn't you consider this as a bear market? I love your response. I love your response because it didn't create another high and it broke the old low. Tolulope said he broke structure to the immediate left. I so much love that. That was one key thing I said. Broke structure. Okay, this still maintained its movement. This still maintained its low, high, higher low, higher high, higher low. This, there was no higher low right here. Okay, price moves in a form. Okay, price moves this way. Price moves this way. Okay, so since this low had not been taken out, you consider this a what? A bull market. It was still in a bull market because of what? Old lows were not taken out. Okay, I agree to that. I agree to that. I so much agree to that. That means you're paying attention. That means you're listening. I thought Berry Finance was typing a message or sending something in. It dropped 27% there, but we didn't consider it as a break as a bearish market. So why do we consider this as a bearish market? Why? Why do we consider this as a bearish market? Why? This. Why do we now consider this as a bearish market? I'd like to get a response. Why do we consider that blue one as a bearish market? It's now in a bearish market. We're in a bearish phase. Everybody's scared. Okay, waiting for a response. Okay, waiting for response because it's more than no, not because of that, not because of that, Silas, not because of that at all. Okay, let me delete what is on the chat and okay, now let's look at this. This was the beginning. Okay, this was the beginning of the bull markets. This was a high formed in the bull market. Okay, this was a low formed in the bull market, and we said for us to confirm, even if it drops 20% and it doesn't break market structure, it's not yet a bull market. Now look at it. We had this. It's not yet a bear market. Sorry. Look at this. We had this high right here, and we have this low right here. Now this was a 27% drop, but it never took out this old low. So this is still considered as being in a bull market. Now look at this. This was another high formed. This is a low formed right here. Now Look at the last high that was formed. See how price went high there. Now look at this low that was formed here. This was why we considered this as a bear transition in price, because we took out this old low. When old lows have been taken out, it means structure has changed to the bear side. Okay, that's what it basically means. And this is still bearish. It's still bearish. Ignore this consolidation right here. I still see it coming lower here. We can see 10K if possible, but I'm watching 20K levels, 15K levels. I'm not supposed to be giving that. That's not a financial advice. Don't sell your Bitcoin because of I said it's going to 10K. Don't sell your Bitcoin because I said it's going to 20K. It's not a financial advice. I'm just saying that it's still bearish. Okay, it's still bearish. This was how we transitioned from a bullish market to a bearish market. We took out this low. Then this was 20% to the downside. Okay, 20% or more than 20% before we went higher. This structure had broken. We'll be looking for selling opportunities. So, do we understand what a bear market is now? Once structure has broken and it has moved more than 20%, 20% or greater than 20%, we are in a bear market. Do we understand what a bear market is now? Yes or no? I like to get a lot of response. If you don't understand, say you don't understand. There's no need to say you understand when you don't understand, okay? Okay? No, 20% is not the same as 20 pips. So please, yes, I'm supposed to say that 20% is not the same as 20 pips. Now, I want you to look at this, Latifa. Take a look at this. Look at this to the downside. Okay. You see, this is 27%. The pips is what is in the front here. So you see, the pips was 18,000 pips. Okay, so 20% is not equivalent to 20 pips. Okay, this was 18,000 pips, and it just equivalent. It was just an equivalent of what 27%. Now, this 27% is the total, like the value of that financial instrument. What is the current price? The current price, then they get the percentage from that current price. Okay, so it fell 27% from current price, which was here before. Do you understand? Okay, let me use it in an accountant's way. The value of a car depreciates on how well you use the car. Even if you don't use the car, once it leaves the showroom, the value starts depreciating. The value depreciates in terms of percentage, and the percentage is converted to the monetary value or the monetary equivalence. Do you understand now? Do you understand now? Yes or no? Let me know if you do understand. Or just understand it's not the same as 20 pips. I'd like to get more response. Do we understand what a bear market is now? I'm waiting for response, waiting for Pancake to type and see what he. Okay, yeah, 20 pips is just like, okay, what is a pip? A pip is the value of increase or decrease in a financial instrument. Okay, how 1 pip is equal to a penny or a cent depending on the financial instrument. Okay, so a pip is just the value in which a financial instrument increases or decreases. It's on your cloud trade platform. It's on your MT4 platform. You see it there on the on the code section. You'll find it there. It's always there on the code sections on the Cloud Trade platform also. Yes, that's it. Because of it didn't show, it's not a sign. It's not a sign because of it didn't break down. Okay, it didn't break a previous area of structure. That's why we didn't call it a bear market in the first place. Even if it drops now, the logic is ideally once it drops 20% or more, it's a bear market. Okay, but the confluence, okay, the confluence we have is that it must break an area of market structure. Okay, an area of structure in price, an area of structure in price. It has to break an area of structure in price before we now consider it. Okay, we're in the bear market now, because it can continue going down. There's no way it continues going down without breaking structure. Okay, so don't let me just say it can continue going down. We don't call it a bear market. It can go down and it doesn't break structure, but it's a bear market. And it can go down, break structure. We consider it as a bear market also. Do you understand now, Olaomi? Yes or no? And Kanki, do you understand also? Okay. If that's the case, I'd like to use another example, but let's quickly jot these things down. Okay. So a bear market occurs when price in the financial markets decline by more than 20%. Okay. And what causes that decline in price is when people are tired of that financial instrument, they start selling it. People start hearing someone said, I will sell this, I will do this, it's going to fall. Then it starts falling. And the bear market can be cyclic. Okay, it can be cyclic or be long term. Okay, after a bear market comes a bull market. After a bull market comes a bear market. That's how it is. It doesn't last forever. Okay, it doesn't last forever. It only lasts for a while, a couple months, a couple weeks, a couple years. Also, the reason price falls or declines is because of people are selling. People that bought at a very, very good price and they feel it is time to take profits. What do? They start selling their financial instruments into the market, and you that bought at a wrong price or not really a good price, you end up taking the loss for it. That's why I always advise to buy or trade or sell at a good price when you're trading. Okay, so another example we can use is the S&P 500. Though there was one time the S&P 500 declined 20%. That's 500. Yes, it was this time, 2020, during coronavirus. Now, I'll show you guys something. During the whole lockdown and all. This is the 20% here. But see what had happened before. Look at what had happened before. Look right here. That's fall, or it fell 20% right there. Let's move this to the side here. But if it was me, where would I consider my own bearish market? I'll consider my own bearish market here. Once you broke this old low, I'm bearish right there. So when you just start selling here, well, you sell, you make money a lot. I would have started making money here. So the reason I said it has to break structure is as a form of confluence. Okay, a form of confluence, an added reason for you to believe we are in the bear market. That's just it. That's simply what it is. So before I proceed, do we understand everything we talked about when we said what is the bear market and understanding what the bear market is? Yes or no? Before we hop on to the next thing on the what we'll be learning today. I already said the conference like 10 times already. Okay, let me say it again. Break in market structure. Okay, break in market structure. I said an old low from the bull market you had before has to be taken out, or a recent low from the bull market you had previously has to be taken out. has to be taken out. That means it has to be eliminated from what you saw on the S&P 500 right now, where I said I would have considered that area as my own breaking market structure, as my own bear market. How do you see when it goes down? You see price fall now. You see price start coming down. Like you see price start coming down. You'd see price start coming down. That's how you know it's a bear market. You see price start falling, start coming down. That's how you see it's a bear market. Exactly, in making sure, Alimat, you get the gist now. In making sure the new low is lower than the previous low. Basically, you can trade this on any time frame of your choice, any time frame you like, any time frame you're comfortable on. But I prefer to see these things on the daily time frame. Okay, on the daily time frame or the 4-hour. One of those two is good for me. Okay, the daily or 4-hour. One of those two is actually very, very good for me. Okay, so phases of price in a bear market. Now, the phases of price in a bull market is the same as the phases of price in a bear market. Okay, just that one it is going up and one it is going down. Now, let me show you on a screen. Let me show you on the screen. Let's use this I was using before. Okay, so I'll just delete all of this and hide all of this. Okay, so let's pay good attention. Okay, in the bear market, or let's talk about the bull market so you are able to understand what the bear market is. In the bull market, we have expansion and retracement. Expansion and retracement. Expansion and retracement. Okay, in the bull market, this is what you have. In a bear market also, you have expansion and retracement. You have expansion and you have retracement. You have expansion. Now, the phases we have in price is the expansion and the retracement. The expansion is the big move. Big move. This big move that aligns with the direction price is supposed to go in. Okay, so the expansion is the big move to the downside. The retracement is the small move against that direction. Okay, the expansion is the big move that aligns with the direction price is supposed to trade in. While the retracement is the small move against the direction price is supposed to trade in. Those are basically the two faces in price. The two faces in price when it comes to a bear market or a bull market. Okay, so the faces in price of a bull market is simply what? The expansion and the retracement phase. Do we understand? Some people call it impulse. Impulse is the expansion. Some people say correction. Correction is the retracement. Okay, those are the two major things. Do we understand that the two phases in price is basically expansion and retracement? Yes or no? Do we all get the logic behind expansion and retracement now? So let me show you in the real chart. Let me show you in the real chart. I just showed you the diagram. Let me show you in the real chart. Now, see this. This is expansion. This is retracement. This small move against the direction which is supposed to be down is retracement. This is expansion. This small move against the direction is retracement. This is now expansion with a bit of retracement in it. I'll consider it expansion, the small move, retracement. Let's go to the 4 hour to see it clearly. That's 2020 March. Okay, great. We can see clearly on the 4 hour now. Do you see? We've got expansion, retracement, expansion, retracement, expansion, retracement. Then this was like so much consolidation before price time moving higher. So this was a bear market. Then we look at this right here. Look at this right here. Look at this right here. Let's see this. The old eye in the bear market, what happened to it? It took it out. We took it out totally. We took it out totally and we retested, then we started moving higher. So the bear market transitioned to a bull market there. Do we all understand now? Okay, great. Love the fact that we are all catching up to it. Okay, I'm sharing my screen back right now. So, what to do in a bear market? Now, I'll make this an open discussion. What do you think you should be doing in a bear market? I'd like to get everybody's response. What do you think you should be doing in a bear market? What do you think you should be doing in a bear market? Okay, yeah, we got a lot of people typing. Let's see. Emmanuel says invest less. Wise. Basi says buy. Basi, what will you be buying in a bear market? Remember, price is going down. Okay, price is going down. Price is going down. Remember, Basi, price is going down. Price is actually trading lower, going down. Yes, wait for a retest of a sell to the OB and ride the wave down. Brilliant. That's golden right there. Very, very golden. Golden stuff from Kelechi. Sell stop entry. I love that, David. Sell stop entry. Okay. Now, Basi is very, very correct. You can buy in the bear market too. And I'll show you how to do it. Okay. Yes, I like the fact that everybody gives an idea of what to do in the bear market. Now, let me get a pen and paper if you haven't been jotting anything I said since now. But what do you do in the bear market? First thing first. For you to survive in a bear market, you need to protect your portfolio. Protect your capital. That's just the meaning. Protect your portfolio, protect your capital. Now, how do you protect your capital? It's two ways. Either you withdraw your money out, or you close all your position and wait for the bear market to wash away. That's the first thing. Protect your capital. The second thing is you can become a bear by selling in the financial market at that moment. So this is for like people that trade forex and all derivatives, because you'll be selling, for selling opportunities, just as Kelechi said, wait for a retest of a sell order block to ride the wave down. Every time price comes up, you sell. Every time price comes up in a bear market, you sell. That's just another thing you can do. Okay, that's another thing you can do in a bear market. Now, The last thing you can do is what I'll be talking about now, taking advantage of discounted price of assets. So let's go to the charts. Let's go to the charts. Now, what do I mean? I can delete this, right? Deleted them, and yes. Now, in the financial markets, price is of two ways. Okay, price is either premium or discount. Okay, price is either premium or discount. I want us to pay good attention. Premium means price is going up, very, very expensive. You don't want to buy when something is expensive. Discount means price is coming down, price is cheap. When you are in a bear market, it simply means price was expensive before, and now it is becoming cheap for you to have an opportunity to buy such financial instruments. Do you understand what I just said? So, premium means price is up and very expensive. Discount means price is down, very cheap. If you were unable to buy a Rolex at $1,000, then it continues going up $2,000, $3,000, $4,000, $5,000. Then all of a sudden, one morning you woke up, you find that Rolex at $500. What would you do? Would you buy it or you won't buy it? Is it too expensive for you again? You didn't buy at 1,000, you didn't buy at 2,000, you didn't buy at 3,000, you didn't buy at 4,000, you didn't buy at 5,000, but now it's 500. One morning you woke up. Would you buy at 500? Would you buy at 500? Yes or no? Anybody with no that they won't buy the Rolex at 500? Okay, me, I won't buy the Rolex at 500. It's just a joke. I would buy at 500 because it's cheap from $10,000 down to $500. I would gladly buy that Rolex at that price because it's cheap. It's discounted for me. Okay, the Rolex was expensive. It was premium. Now it's discounted, so I can purchase it. That's just how the financial market is. Now let me show you something on the charts real quick. Let's use S&P for example. Now look at S&P. Let's go to the daily time frame actually. Look at S&P. Okay, let's just go back in time. Okay, let's go back to 2016. S&P moved from 2016, that's $1,820 to $3,410. You didn't buy during any of this time. Okay, you didn't buy during any of this time. Now, during coronavirus, price came back to 2,200, big figure level. 2,200, big figure level. Would you buy, or you are still skeptical that it is still expensive? Would you buy a share of S&P? Would you buy? Yes or no? Would you buy? Yes or no? I'd like to get a lot of response. You still be skeptical. Wow. You'd still be skeptical of buying the S&P at that price. Wow, you still be skeptical of buying the S&P at that price. Why would you still be skeptical of buying the S&P at that price? Is there a reason you still be skeptical, Kanke? Morning, Hagu. How are you doing? Morning, Antonia. Hope you're doing good. Yes. So, Kanji hasn't given his reason. I guess I'll just proceed. So this is like from premium price to discount just for you. Just for you, stop purge, retest of order block, and boom, we went back to 4,000. So imagine you bought at 2,200. Okay, big figure, 2,200. But right there, like you don't even get any drawdown at all. You didn't stay in a loss for a while, and you just went haywire to this. Yeah, right. It's like 2x. If 100% your money already, your money had touched 100%. Like your money had hit 100%. Just waiting from 2020 to 2021 May to May, you made 100% of your money. Now that's golden stuff right there. Like that's some golden stuff right there. Simply by just buying during Corona and cashing out after Corona. Yes, I understand the price could still get cheaper, but remember, cheap is cheap. Cheap is cheap. It's cheaper. I don't think there's that theory in the market. Now, the reason I would have bought here was because of confluences, like I said. This was a stop hunt right here, and we blew to the sky high or to the sky. And I've gone to like the 4 hour to go and look for my entry. Okay, so that's just like the logic right there. Stop hunt, breaker block, order block, everything, and we went sky high. So price could have still come down cheaper, and I could be in the mud too. Okay, so that's just the logic. You always capitalize on discounted prices. Exactly. Now just imagine everybody says buy low, sell high, but I buy I buy below a low and I sell above a high. Okay, so yeah, so that's just the logic behind discount. Now this discount and premium don't occur on only US 500, they occur on almost all financial instruments. Okay, on almost all financial. Look at GBP USD. This was premium. This is discount. Just this small stuff. From this uptrend, it was premium. This is discount. Check what happened today. I caught this buy move while I was talking to you guys on the call. I caught this buy move. This buy move right here. I'm still in it though. I just took partials from it. I caught the buy move. This is one area you would like to buy from. Right there. You could have something like this right there. A slow move into the order block. Let's see, possibly before we go sky high. Not a financial advice, do not take the trade. Thank you. So that's just my thoughts though. And like I said, it happens every single time. Now, how can you spot premium and discount easily? You can use your Fibonacci in the bear market. Okay. So let's say this was a bull market. We're just imagining, this is a bull market and this is a bear market. All you need to do is just put your fib from the low of the bull market to the high of the bull market, and you place your trade. You look for buying opportunities at significant levels on the fib. That's just how it's done. Very simple and easy. So let me share my screen. Wow, that's golden stuff. In the sell to the OB. Lower time frame, I guess, right? Lower time frame entries. So brilliant. I knew it would be a lower time frame entry. Like day trading, I haven't been doing much of day trading lately. Just swinging. I feel it gives me time to do more thing, so I just swing. Now, the last thing on our list is the conclusion. Then we go to breaking down of NZD USD. Wow, we already said a lot. We already said a lot. Okay. Don't worry, reach out to your account manager. Tell your account manager you want to reach out to me. You get access to me. Okay. So the conclusion is basically the bear markets or the bull markets, it will surely have a large influence on your investment, on the trades you're taking in the financial market. It's just the major thing is to know how to navigate either of the markets. Okay, so it's very, very good you take a step back to understand what condition the market is in and make the right trading decisions in any of the markets you find yourself. So that brings us to the end of the bear markets. And exactly, in the bear market, you reserve your buying capacity, you look for selling opportunities. Adebanjo, I already told you, reach out to your account manager. Tell your account manager you want to speak with Chibike and you get access to me. So if you're not on the Telegram channel or you're not on the Telegram group, I would gladly drop the link again on the group to on the webinar so you can join. So you can join the Telegram group. A lot of things, a lot of activities on Telegram group, trade ideas. You get to see traders that can help you better your skill. Get to talk with traders, get to see me drop price action regularly, breakdowns and all. No, um not only GU, just if it's USD based, I believe you will trade it because I told you guys this like a few months back. DXY is the king. Once you know what DXY is doing, you'll be able to trade all USD based there. Okay, how do you place a sell order? The same way you place a buy order, that's the same way you place a sell order. All the only thing you just do is you click on sell, not buy. That's how easy it gets. So you place a buy order on your trading platform, CloudTrade or MT4, the same way you place a sell order, but you're clicking on sell this time around. So I promised I would be breaking down NZD on the call. But before I break down NZD on the call, when we talk everything we talked about today, when it comes to bear markets, do we all understand? Do we grasp it? Do we understand what a bear market is and how to navigate the bear markets? Yes or no? Do you understand what the bear market is before we hop into the breakdown of price and all? Do we understand what the bear market is? So I just sent out a few polls. Let's please respond to it. Thank you. So I sent out a few polls. Let's just scroll through them and see it. Okay, great. I'm glad everyone understands or has an idea of what the bear market is. So let's go to NZD as I promised this morning. Okay, NZD. Okay, so first off, before I hop into NZUSD, I just want to give Kelechi a heads up. Kelechi, watch GU properly because we could not or we might not get to that order block. We could just fill up 50% of the fair value, and we react off this breaker block right here. Or this one, anyone though, just watch it properly. Might not get to the FVG. I might just react off this breaker, any of these breaker blocks right there. So just stay safe. Now NZD USD. Okay. So we starting from the monthly time frame. Okay, the monthly time frame. Now, if you're on the Telegram group before, you've seen me do this multiple times, and this will be like one of the time I'll be doing it. I won't be sharing the trade on the Telegram channel. I won't be sharing the trade on the Telegram channel. Sorry for that. Sorry for that. Hopefully, yes, New York Q-zone will fill that up. So NZD/USD, let's dive right into it. So, what do I see on NZD/USD? Okay, all I can see on NZD/USD is basically, let's just say I see accumulation, manipulation, and distribution. Okay, that's the first thing everybody would see. Everybody will be looking for AMD, Wyckoff schematics and all, but there's more to that AMD right there. Okay, what if I told you there was a stop purge of clean lows? Okay, so we had that accumulation, manipulation, and we are anticipating major distribution to get back to this old age. Remember, this is the monthly time frame. Because I said it's going to go there doesn't mean you need to place a buy order on NZD/USD. Now wait for, only God knows how long it will take to get there. Okay, so you just, once you understand higher time frame bias, all you need to look for is RTOs to trade back into this upside. Okay, so I just delete. I'm not a fan of AMD, so I'll delete that, and all I can just show you is this. And this again. And this. Okay, so that's old lows taken out, stopped spurged, and this is a high I will be looking at. For if I could buy now, I would also hold the trade, possibly a swing trade, because I feel comfortable swinging trades, and I'll be looking for take profits at this old high. Okay, so yes, this eye and this eye, before I think of it coming back to fill this inefficient price action. So what is inefficient price action? If you look at this candle, it has a gap. If you look at this candle, they were all filled, or all their gaps were filled. So it means this is a trading range that was filled. That's basically what inefficient price action is, or inefficient price action. I've explained it before on previous webinars, and I feel it will take a lot of time to explain it again. So yes, right here we have a break in market structure. So this break in market structure also acted as a breaker block, last bullish candle before the whole reversal. It acted as a bullish breaker block right there. And yes, we did retrace back into it, yeah, after the week purged, we traded higher. So on the weekly time frame now on the monthly time frame, before I go to the monthly time frame, or if I go to the weekly time frame, we have a bit of inefficient price action, but I will tell you why I will not consider that inefficient price action as something important. I'll tell you why. Now, why won't I consider this as something important? Okay, we already traded away from the breaker block. We have a propulsion block right here. So based on my own thoughts, okay, sometimes when propulsion block falls into other types of blocks, they tend not to see price return to them. Price just feels an imbalance or something and trades away from them till whenever price changes direction and trades back to them. Okay, so also we have this inefficient price action a bit filled. Okay, so I can go to the weekly time frame now, and On the weekly time frame, you would agree with me that that big inefficient price action we saw on the monthly time frame is no longer there on the weekly time frame. So more reason I feel price can't or doesn't have any business returning there. So I can delete that and focus on current market structure. Okay. So that order is still intact for me. And yeah, now what do we have on the weekly time frame? Zooming into price. Um, we have this right here. We have a stop purge right there on the weekly time frame. Okay, so we have a stop purge right there on the weekly time frame. Can now go to the daily time frame. Now on the daily time frame, you can see how price actually traded lower and all. You can see everything it did, and also we can still see that within that stop purge of those clean lows, we still had another mini version of that stop purge here. So what do I feel price is likely to do? Okay, I feel price has a tendency of trading higher from here, because if we look at this is a high, this is a low, this is a lower high, this is a lower low, this is a lower high. Price was caught up in a range. Market structure broke here by that week. Okay, market structure broke using that week, but price had more reasons to go down lower. Okay, price has more reasons to go down lower. Remember, major market structure broke already, but price has more reasons to go down lower because of what? Liquidity was right here. Now, after this major break in market structure, we now consider this as okay, a new low, lower low, and the what? This high was taken out. This short-term high right here was taken out. So I can consider that as another minor break in market structure. So to the 4-hour time frame now, see right here, okay, minor break in market structure. To the 4-hour time frame now, what do I think price is likely to do? Okay, two ways. Price is likely to come back to this order block for more buys. To what we'll now be doing is we'll be taking out this order, or we just find a reason to reverse on a lower time frame inside this candle, because what? Let's go down to the 1-hour time frame. You see it's better. See that big order block that we have, and see that big inefficient price action there. We already have price feeling 50% of it. So I feel price might just push this low, then play with something inside this week. Let's see, that could be another block right there. Okay, you'd have to go down to a lower time frame, but let's just say that it reacts at this proportion right here. Okay, so I'm bullish on NZUSD. Let's just see if price fails. I won't be buying now though. I'm more interested in this one right here. I'm more interested in this one right here, the one on the 4-hour that I showed you guys. I'm more interested in buying in this one right here, not interested in this ones right here. But if price reverses from there, I'll just look for an RT on a very, very low time frame and get my entry. It works either ways. So I'm bullish on NZUSD long term, okay? Bullish on NZUSD long term, possibly bullish to this high. If it does come back here, I'll be bullish to this high. That's just the first target, though. But short term, I can still hold my trades to this highs, okay? Because this is like that's just 449 pips. Well, if I could get my entry from here, I can make like 142 pips from that, and I'm more comfortable with that, risking a very minimal amount of 30 pips to catch 143. Now that's very, very, very golden. Okay, so that's just my thoughts on NZUSD. If you have something separate, Uh, Drop your thoughts in the Telegram channel. We are bullish on NZUSD long term. Okay, bullish on NZUSD long term. If anything discussed doesn't resonate around you, don't worry. There's a lot of content on the Telegram um, channel for you. Okay, you don't have to start asking questions. What is stock purge? What is liquidity? What is all of that? No, no, no. It's on the Telegram group. Um, all thanks to I can't remember who dropped that PDF, but thank you very much for dropping that PDF. Okay, it will help people understand the words I use better. So just check the pinned messages, find the PDF there, you can go through it. And yes, this brings us to the end of today's webinar. Before I proceed, do you understand how I am bullish on NZUSD? You understand why I'm bullish on NZUSD? You understand why I'm bullish on NZUSD? You understand why I'm bullish on NZUSD? I would share the top-down process again on the Telegram group if that is it. Okay, I would explain the way I explain ERGBP in detail. Okay, so yes, this brings us to the end of today's webinar. It was amazing having you guys on here. The markets trading is actually one of the best game to get involved in. Okay, I call it a game because of there's a lot of money to be made, and if you know what you're doing, minimal losses to be made. Okay, think long term. Don't rush the process. Submit to time. You'll do the right thing when trading. Yes. So good luck and good trading. See you on Tuesday next week for the next webinar. Cheers.